All right. Oh, I thought I was sharing charts. I guess I'm not sharing charts. Let me do that. And good morning to everybody. It is 6:30 a.m. on Wall Street, 3 hours before the market open. Let me remind you that trading's free. Oh, you know what? I need to do the other part of the, the process first. Welcome to QuantBox Live. It's time to get your macro on. This is our opportunity to uncover the best fundamental investment opportunities across global markets. My name is Wayne McDonald. I am the founder of QuantBox, and I'm also a classically trained economist at Harvard. And I love econ, macroeconomics, because it's the basis of my fundamental bias. And from then, I go out and use technical analysis to confirm or deny that hypotheses. And so QuantBox does quantitative analysis of macroeconomic data, but it also looks at trend and looks at seasonality. Yeah, it does technical analysis. Amazing. So you can attend these live if you're a member of QuantBox. But if you're watching this on YouTube, it's probably 11 o'clock in the morning. 11. Our day's already done by the time you're watching this on YouTube. So, hey, if you like what we do, maybe you want to swing by quantbox.co and take a test drive for less than $8. And with that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad. Ooh, that's good coffee. Past performance, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. And the last video was way out on Thursday. And now today is the 26th of June, which means it's the last week of the first half. And I've been already thinking about the second half for probably a good week to 10 days. So for some, it's the last trading week, but we're already on to the next part of the year because we're thinking ahead. Anyways, let's get on with it. Let's log into the Google Cloud. Remember, for those that are having problems logging in, if it says your email's not associated, you're probably in the wrong browser session. So you got to change your, right? Or maybe you should try Chrome since it's a Google product and you're logging into a Google product. Or, yeah. And for some reason, people don't read that either. So they send me stuff like, it don't work. None. Quad box is broken. I'm like, no, log into the right email, bro. So, anyways, that solves it 90% of the time. Okay. Anywho, here we are, and I don't want to start here today. I want to start here. Smart Money Tracker, aka the Commitment of Traders Report. Okay, that's kind of cool. And boom, check this out. A lot of money has gone into the pound. A lot of money has gone into the pound week over week. A lot of money has gone into the pound. So that's kind of interesting. And in fact, if you do further analysis of this, a lot of shorts came out as well. Let's see if I can. Oh, this I forgot. There's an overlap here. I'm gonna have to. Well, I have some interesting things on its way. So, anyways, I don't have to fix this because I can't tell you about it, but I have interesting things coming. Uh, Next week, by the way, would you like to know all the new upgrades for QuantBox? I think we'll do it next week. So, one of the things that I'm trying to do, one of the goals I have is to build the third quarter outlook. So, I'm going to need to start doing that. And I thought maybe early next week, like I don't even know what day Canada Day is. Let me just quickly look at a calendar. So the first Canada Day is Saturday. Can I? No, I can't do it then. July 5th is probably not a good day either. Are people going to be back July 5th after July 4th? Is that going to be a holiday? Maybe we should try Friday the 7th. I can do the quarterly outlook and at that event tell you like the amazing upgrades. There's a lot of upgrades. A lot, like a lot to be released for QuantBox. So yeah. Cool. So maybe we'll combine that. So we'll pencil that in Friday, the 7th of July. All right, cool. So, anyways, a lot of new money has gone into Great British Pound. Okay. So that's kind of cool. Okay. You can see more long than short. Okay. Cool. Very nice. And so this is moving to the left ever so slightly. It was very bearish. Okay. And then remember oil? Remember how it was like 90% long? Whoa, 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 whoa. Okay. Money coming out of oil. And that's kind of interesting too, huh? So oil is shifting a little bit. So, anyways, I'm sure you've gone through this. Um, okay, so I just want to reiterate that. So you can go out to score. No, let's do a scatter plot. Now, I don't know if you watched Saturday morning, but from about 6 o'clock in the morning to about noon, I watched the Russian coup. And I was coming up with trade plans and what should I do with oil? What should I do with gold? What should I do with the dollar? And then by lunchtime, it was over. Kind of, I could have been watching Bugs Bunny. I'm kind of mad, like, wow, huh? So, anyways, interesting. But then it's come and gone, and not a lot seems to have happened. Let's take a look. We got Bitcoin is down just about 1%. Nasy's down about 1%. S&P 500 is down what? Not 0.75%. Dow is down 2/3. So you look, stock market down, stock market down, stock market down, Bitcoin down. Okay, so maybe a little risk off. What do you think? Just looking at the currency complex, the biggest loser is USD Rand. Okay, down 0.75%. Okay, biggest winner Kiwi dollar, not even up 0.5%. Doesn't seem like a big deal, right? No. Look at the same thing differently. Biggest winner right now, gold up 0.5%. Yeah, but stocks down, stocks down, stocks down. Okay, even Nikkei is down, DAX is down. So it doesn't feel right now like a risk on kind of tone. So this could be a great opportunity, right? Because if they're not going with trends, so the way to use this is you look at what should be going up or what should be going down, and then you find stuff that's down but should be going up, for example. But actually, it's pretty good. it's Everything is still pretty good. Looking at the calendar for the week, wait, it's looking out far, 6 days. Let's do this. Let's see if we can clean this up. We don't want 7 days out. That's too far. We don't want 6 days out. That's too far. Even 4 days is too far. Okay, that's cool. Ba-ba-da-da-ba-ba-da-da. Okay. The other thing we could do is, should we filter out low? Yeah, let's filter out low. Get rid of low. Just medium. Okay. The great stuff has already happened. Wow, it's put in a weird order. Look at, I'll try to figure this out. Why is it doing, uh, where's it ignoring the shorter time? How funny. This is interesting. Sorry, we made changes here and I love the changes, but what the heck? Maybe we can just change it. What's the date today? It's the 26th and 27th. Let's get rid of these other things and just narrow it down and see. Yeah, see, it's put it in reverse order or some weird order. It's not even reverse order. Okay, that's better. All right, in 7 hours, Lagarde is speaking. Okay, Dallas Fed manufacturing, very regional. I mean, it's good to keep your eye on that. Claims in the eurozone, speech. Euro consumer confidence. Okay, but this is all tomorrow. 21 hours. Lagarde speaking. Yeah, that's going to be a biggie. Euro. Okay. I mean, along this Euro stuff, we were just really trying to figure out, are they really that aggressive? Is inflation really that high? The answer is probably yes, right? So this is more like, does anything that, and do any of the numbers or any of the speeches go against economic trends? And probably not. And I'm sure a lot of these ECB speeches are just going to reaffirm that they need to raise interest rates. They need to be aggressive. They can't even thinking about stopping. And if they don't, Lagarde's going to be mad. And she speaks, after them. Cool. Durable goods when it comes to the United States way tomorrow. Well, it's a volatile number. So I usually don't make a big stink about durable goods, but maybe it's important when it's important. When you lose your job and you're worried about running out of money and the dishwasher breaks or doesn't do a very good job, do you run to Home Depot and buy a new one, or you just get yourself a sponge and some soap? Do it the old-fashioned way. Wash the dishes by hand. Millennials, you can do that. Might get your hands dirty or clean. Um, but yeah, so you're like, I'm not okay. I lost my job. I'm worried about money. The dishwasher's not doing a good job. Well, we're gonna do it by hand. Okay, which means you don't buy a durable good. I'm sure it's easy to buy a fridge, but I bought a fridge, a commercial fridge for my house during COVID, and it was impossible to get a fridge. It was amazing. Like, I had to have mine shipped from North Carolina, and it was a floor model, and I paid extra love to get them to box that sucker up and sent to my house. It was a nightmare situation. So I'd be interested if all those supply chains are fixed now, and probably are. But anyway, so I don't make a big thing out of durable goods. Case Shiller's interesting because it'll show the extent of the decline in the residential real estate market. And it's interesting because home builders are trying to build a lot of homes. There is a shortage of homes in the United States, but nobody's making affordable housing, because there's no money in it. Hey, poor people, get rich. There's no money in building your houses. I mean, it's serious. Like, I'm joking and it's a bad joke, but the costs are so high that there's no incentive at all to build a cheap house because you can't make any money. It, and so if you're going to make a house that's not affordable to someone, I'll make up a number. Let's say you used to be able to make a profit building a house you can sell for 300,000, but the family that can't buy the $300,000 house because the mortgage is too high, well, then they can't buy it no matter what. And if you can't build it and sell it for enough profit at 300,000, then you're like, well, I can sell it for 325 and maybe some of these buyers will still buy it. But you're like, but I can sell it at 6 all day long. People that don't need the money have the money. So you're like, so I'll build a house I can sell at 6, that kind of thing. Like why do it at 3 and a quarter? I can make more money and have more and stuff. So, anyways, there's that kind of shift. So that's what we want to look at. Also, really, the case Shiller is good because they show you regionally, and this is where you find out. Um, you know, California might be one situation, Michigan might be in a different one. How's Texas doing? Okay, so like money's leaving California and going to Texas, for example, it would be a guess. Still, I was talking to a buddy of mine in Dubai, and he said real estate there is booming. Prices are through the roof. And I'm like, yeah, that's where all that Russian money, fleeing, go somewhere. Dubai's a wonderful place for that Russian money. Whoop whoop for the ruble. Okay, especially if you, I don't know, have tanks, you can roll in, rob a bunch of banks, get a whole bunch of U.S. dollars, and then somehow leave the country and call it a coup. You're like, I call it bank robbery. But anyways, who knows what's going on there? So this is a good gauge for regional. Okay. How about inflation in kitty cat? Yep, CAD land. Is it improving? Is it getting better? Yeah, well, dropping, a whole percentage point seems ambitious, but yeah, if we can get a 3 handle, that'd be good for Canada, huh? Okay, building permits. We want this to keep going up, right? Like, for example, like I was just saying, there's a shortage of houses and interest rates are high. So, people that don't have a lot of money, let's say people that are buying their first home, um, it's hard to build a house with enough profit margin. And by the way, it's not easy to build a house. So, you can't get mad at the builders for doing things because it's hard to get everything. Prices for everything have gone up. So to build it affordably and be able to pay yourself your normal profit margin is very difficult, but it's very much needed. Um, so you want these building permits to come in and keep growing, right? You want that. Now, if building permits start dropping, see, it's expected to go up quite a bit, actually, right? If this number was getting smaller and smaller, well, inflation, huh? But the more building permits, which means we're talking about the future housing, right? Like in 3 months, in 6 months, or in a year, these houses might be built and put on the market, which should be disinflationary, right? If suddenly there's a lot of homes on the market next year, right? For 1.5 million new houses next year, cool. Maybe that'll get prices down and it'll become affordable again. And the Fed is expected to lower interest rates, so maybe mortgages come down, right? Cool. New home sales, again, we want to track that to be good, and then we don't need to go further up. All right. I'll have to figure out this calendar. It's a little confusing. All right. So that being said, ooh, I left some of these things on. What's on here? Oh, wow. Good for you. All right. So let's do the scores card summary. So yens are still the best thing to look at. Okay. Particularly dollar yen, Swiss yen. So let's today do the technical analysis on those pairs. Bum 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 boom boom boo boo boo. I guess I'm on a yen. Let's close this. So I got knocked out of one trade last night for 100 pips or 150 pips. Sorry. So the question for today, uh, for these pairs that we're bullish on, are we buying off this 21? Now, a little concerned that we did make a high, but not a great high. So we're talking about technicals here, right? It's not a really good high. It's not a high, it's a low high. And that doesn't show you a good sign of bullishness. It's not bearishness. But here's the reason you need to be concerned. You could be a bear. Wait, my drawing tool didn't show up. Didn't show up to work today, huh? Huh? My drawing tool didn't show up. Let me try again, and it'll probably have multiple iterations running. Run as administrator. Maybe that'll work. Nope, no drawing tool. Man, oh man, that's so sad. All right, well, I'll have to figure it out. All right, so I can't get my drawing tool, but if you were going to be a bear, now I don't agree with the technique really, but if you were going to be a bear, your plan for the week is going to look like this. And you could be short on that M3. And that is the best selling price you could expect for the week. You've learned this at FX Bootcamp. The thing is, it's too aggressive for my taste. And before I sell into an uptrend, I would like to see a reversal pattern before something like that kicks in. Okay. So if, and you can see I'm long, so I'm not projecting this, but if someone wanted to get short, I think that would be the price action that they would be planning, or some variation of that. Like, for example, like a head and shoulders, it would be more like this would be a little lower. Okay. And so I see the probability or the potential for that because this really didn't skyrocket. Okay. Was that right, Denise? A couple of members called for early revision of YCC. Oh, I see. So that could be it, right? That could be the ammo. We don't know. So I was knocked out of my euro yen for 150, and I'm still in this one for 150. So maybe it's euro related too. I don't know. But yeah, that's the right type of information you want to look for. Okay. So, anyways, if you were going to be a reverse, if you were looking for a reversal, you would do that. Um, I don't like counter trend trades. In particular, I don't like it in that type of scenario. There's another counter trend trade I teach at FX Bootcamp. Um, so for me, I would hope, because I'm a trend trader, that this is the plan for the week, that we're on our way to 110, for example. And the news over the weekend maybe confused the markets or is confusing or whatever, or maybe there's some profit taking going into the end of the first half. Okay, cool. So I don't want to plan for the reversal. I'd understand it, but I don't know if I want to trade the reversal. I'm a trend trader, so I would still look to buy the dip. Now the other one was Swissy yen, and I don't think I even got the Swissy yen going. So I don't want to move that. I don't want to move that. Okay, we'll get rid of Aussie because it's the weakest and definitely doesn't look like a buying opportunity. So that'll have to wait. Uh, so if you're worried about changes at the YCC, as Denise points out, that there's a slow change in sentiment. So not a majority, but it's starting to show up. This might be the one that you sell. This is the one you sell first, kind of thing, maybe. Going to the Swissy yen because QuantBox says, "Hey, pay attention to this one." Yeah, this might be a trade for the day. Okay, much better technicals. This template set up wrong, so let me go indicators. biased pivots. It should be in bullish mode. Cool. So now it's following along with the QuantBox bias. Okay. Buying dips. Target here is 161.5. Okay. Cool. Very nice. And you can see pound, and I just want to make this point. Uh, when I started the presentation today, first thing I looked at was a commitment of traders report, which shows how institutional investors are positioning their money, and they bought 25,000 more contracts. And what's a contract worth? A million, 10 million, 10 million is a futures contract. I don't know. You had to Google it, man. Um, but 25,000 more contracts long week over week. So the institutional investors are starting to buy Great British Pound. And on the shorting side, because some institutional investors might be short the pound, right? It's their prerogative. Well, there's less bears. I can't remember the number now. I don't know, 7,000 or something. 7,000 less bears, but 25,000 more bulls. Oh, okay. So you could maybe use that as part of your bias for the week. I don't know. I don't know the future. And remember that data inherently is a week old because of the way the government reports it. But it is government reported positions. Okay, it's real money that moved into the market Tuesday of last week, reported on Friday. So we know this already on QuantBox, and so you might say, well, we got some up, at least in the medium term, and we are riding the 4-hour 21. The one challenge to this whole thing, so maybe it's a rally that happens later, or maybe we're just describing this move, maybe, right? But nonetheless, this R3 is what we're on, and it's an important number. We're usually not at R3. So I'm a little concerned. But watch that 21. If it breaches the 21, become more conservative. And maybe you say, well, I'll wait. Okay. So again, on Tuesday morning, institutional investors that make large speculative positions, they're not hedgers, large speculative positions are required to be reported to the Commodities Futures Trading Commission. So we know where their money is. It's reported on Tuesday to the government. The government calculates everything and reports it on Friday. So that's what I'm talking about when I said 25,000 new contracts went in. Okay. Tuesday of last week, we know that to be true. So from Tuesday to Tuesday, or really truly Monday to Monday, right? Monday to Monday. So it's this move here. But it's real money. Okay. It's real money and they're interested, aren't they? That persistent inflation will force the Bank of England to raise interest rates and continue raising interest rates even when other central banks stop. And that means if you have invested in Great British Pound, as they raise interest rates, they raise your income. Very cool. And that attracts money. So have a wonderful day. I will see you later. This is Monday, the 26th of June, 2023. Peace on earth. May the pips be with you. May your profits be above average. Cheers.